Over the last quarter, it was a tough quarter with the main fund down about 10%, which is slightly better than what the equity markets fell. And our ESG long-short hedge funds fell about 1.9% over the quarter. So some of the downside there was protected. So the major contributor over the quarter was a company called Power Grid of India, a company we've talked about before. Power Grid actually went up in December when most of the stocks were falling. The reason being was that they had a regulatory reset, where they were able to lock in better pricing in the coming 5 years, and the market really liked this. The other positive contributor over the quarter was a company that we've talked about often before called China Everbright. They're a waste-to-energy business listed in Hong Kong. As they did their capital raising back in September, October, the market's now focusing a lot more on their pipeline, and that pipeline looks very good for 2019. On the negative side, one of our largest stocks we used to own was a company called Open House, a Japanese property developer. It fell 45% over the quarter as general fears came, and these fears were related to both the Japanese market slowing down for property and also global markets. We were stopped out of that position over the quarter. The market outlook for us in 2019, we just wrote to investors last week, which has a fuller overview, but I'd describe it as somewhat constructive. Now, investors might say that in 2018, Morphic was constructive as well, but we think as we look towards 2019, with interest rates on hold and economic data slowing, but not slowing too badly, we look a little bit like 1996. And that was a year where the Fed went on hold and equity markets went up a lot. We think the positioning is very negative, and so a lot of people in the surveys have a very low weight to stocks, and valuation looks attractive. So overall, we have a somewhat constructive view. In particular, we like emerging markets. One of the interesting things to note in the last quarter was emerging markets didn't fall despite the fact that most other stocks markets fell. So we think this is a very good setup for 2019. We are fully invested. We're not carrying any cash in the main funds, and our long-short hedge fund is about 30% net exposure, which is about on average for that fund.